understand that this is one of Zambia's biggest alumni groups. And it's also not just an alumni group, but one that houses some of our best friends in the country. So we really want to engage with you, and our CEO, who's actually on the call, and I'll allow him to say a few things, has been communicating about the interesting discussions that have been taking place on the forum. So we did feel impressed that we come this afternoon and spend an hour or so with yourselves. I will soon be introducing the speakers for this afternoon, but I think it suffices for me to probably say that the Securities and Exchange Commission, as you're aware, is mandated to supervise the Zambian capital markets, and we have a dual mandate, which is supervising the players that come to the capital markets, as well as promoting market development. Over the years, we have been busy with both mandates, and basically our focus has been more of house cleaning. So it is true that the SEC has not really been visible in some sense. Our visibility has been very limited, and there was a reason why that approach was adopted. Essentially, the Commission has always been a very small institution. And sometime around 2012, it was decided that, the market was needed to grow, and the regulator also needed to be capacitated. So we embarked on building capacity within the Commission as a preliminary issue. And with that, we have endeavored to put in place a lot of initiatives that speak to building this capacity that we're referring to. And also just to provide some perspective and background, the capacity building drive for the capital markets is not just limited to the regulator. It's cutting across the various stakeholders within the capital markets. Would include your policymakers as well. We've had initiatives to ensure that we are building that capacity at that level, and as well as with the practitioners, and obviously with the investors. And with the investors, we took more to looking into the syllabi in the schools, in primary schools, in secondary schools, and now we've actually introduced programs also at university level. The whole idea is wanting to address the issue of skill set that will drive the Zambian capital market to its next level. As we come to you today, we are in the process of finalizing a 10-year capital markets master plan, and I know that has been discussed on your forum. It's a very, very important document in terms of how we proceed going forward in the Zambian capital markets. This afternoon, I have two resources that will be presenting to you, and I did feel it important that we introduce them adequately, starting with the lady that will be making a presentation. And basically, we're trying to just do this as the first of our series of town halls that we'll be holding with groups such as yourselves. We intend to come back with more information and to engage more on more specific things. But today's we'll basically focus just on providing this introductory presentation on just giving you an overview of the current Zambian capital markets. So the presenters for this afternoon, Mrs. Leah Simasiku, and I'll introduce her just now. Leah Simasiku works as our surveillance officer here at the Commission. She also formerly was in the finance department. Sorry, her passion for the capital markets, I'll just beam this so that you can follow me as I do this. So her passion sorry. So her passion for the capital markets development led her into undertaking a number of activities that are tailored towards contributing the development of the markets. These include co-spearheading the first Capital Markets Schools Challenge and various other activities. She has over 8 years experience in the financial sector. Leah holds a Bachelor of Arts in Business Studies from Greenwich University and a Master of Business Administration in Finance from the University of Lusaka. She also holds a graduate certificate in capital markets from the George Washington University. Further, she is an alumni of the IFC Milken Institute's Capital Markets Training Program, developed and implemented by the IFC and Milken Institute in collaboration with George Washington University. This program aims to build the next generation of capital markets leaders and players around the world, but more importantly in Africa. Leah has also undergone some very specialized training in areas that include risk-based supervision, securities regulation, and financial crisis management with partners like the Toronto Centre and the World Bank. She also interned with the World Bank as an analyst. Benson Mwileli is a passionate economist who's currently working with us here at the Commission as an inspector and an analyst within the Markets Supervision Directorate. His role involves monitoring the licensed players within the Zambian capital markets and ensuring that they adhere to the various requirements of the security regulations. Benson has over 7 years of experience in the Zambian financial markets with experience in commercial banking and capital markets. It has been and continues to be part of numerous initiatives aimed at developing the Zambian capital markets and improving their ability to support economic development. He has also been part of initiatives aimed at contributing towards adapting them to the ever-changing economic environment. Benson holds a Bachelor of Degrees from University of Zambia in Economics and a Master of Science degree in Finance and Investment from the University of Bradford in the UK. He also holds an Advanced Diploma in Management Accounting with the Chartered Institute of Management Accountants, CIMA. Benson has also undergone numerous specialized training programs in areas including digital financial services, risk-based supervision, virtual currency regulation, financial crisis management with partners like the Toronto Centre and the World Bank. Benson loves continuous learning and is an avid follower of global and national financial and economic news and development. His current interests include financial technology and green financing. Without any further ado, I would like to introduce the duo to make this afternoon's presentation, and just to assure you that you're in very good hands, as you can see from the brief profiles that I have read for you. And also bearing in mind that we do actually have in here our CEO and other resources that are just so eager to engage with this forum. Good afternoon.
Good afternoon, everyone, and thank you so much, Ms. Mundia, for that humbling introduction. So I will go first in today's presentation. Let me just, so I'll turn off my video since most of us will be focused on the PowerPoint presentation. And let me just get to share the screen. Are you able to see the screen? Okay. Okay, so our presentation today is mainly to just give an overview of our Zambian capital markets in this town hall series that the Commission has actually begun. So our presentation outline, our presentation will mainly have 4 parts. So the first part will look at the Commission itself, the Securities and Exchange Commission. The second part will look at our capital markets here in Zambia. The third part will just drill down to look at the actual products that you will find in our capital markets. And the fourth part is where we can have an interactive session where we get to address whatever questions you will have. So without further ado, looking at part 1 of the presentation, who or what is the Securities and Exchange Commission? So basically, the Securities and Exchange Commission is a regulator of the capital markets here in Zambia. So in Zambia, we've got three financial sectors. So that is the capital markets, the banking sector, as well as the pensions and insurance industry. So we regulate the capital markets part of the financial sector in Zambia. So the commission itself was established in 1993 through an act of parliament, the Securities Act Cap 354 of the laws of Zambia, which has since been repealed and replaced under the Securities Act number 41 of 2016. In terms of the reporting structure, so at the apex, we have the Ministry of Finance, where we actually report into. So our Minister of Finance actually appoints the members that sit on our board. So he approves or appoints nominees of institutions that have been included in our act to sit as board commissioners on our board. So these members are derived from institutions such as the Bank of Zambia, the Law Association of Zambia, VICA, ZACI, Ministry of Finance, Ministry of Justice, as well as the PIA. So the commission itself is vested with the functions of the commission. So this is where the board of commissioners actually sits. Then below that, we then have the secretariat, which entails management and staff of the commission who are responsible with the day-to-day running or the day-to-day operations of the commission. So what is the mandate of the Securities and Exchange Commission? So the SEC has got a dual mandate. The first being market regulation and supervision, as well as market development. So under market regulation and supervision, we've got various activities that we do to ensure that we are able to regulate and supervise the market. So some of them include ensuring that all market players or market participants in the market are actually licensed. So we get to license all market operators that are in the industry, as well as the market infrastructure, such as the securities exchange. We also make sure that all securities are registered and fund managers or collective investment schemes are granted authorization to be able to operate within the capital markets. So in terms of supervising, we conduct inspections that help us to determine or check that the market operators are actually operating in a manner that is in line with the Securities Act. We also conduct surveillance just to check on the happenings in the market. Then we also check on compliance as well. There are a number of obligations which capital market operators need to adhere to or comply to. So we need to make sure that they are complying with these various continuing obligations. We also attend or address complaints which come from from people that are in the market. It could be the public, investors. So whoever has got a complaint and comes through to the commission, we actually have a desk that is dedicated to ensuring that complaints are handled, processed, and ultimately closed up. We also conduct market analysis as well as investigations, mainly from our supervision and legal departments, to ensure that whatever issues could have come up or identified are investigated and addressed. So on the flip side of the coin, we then have the market development mandate. So in as much as we are regulating and supervising this market, we also have an interest in ensuring that the market is able to develop. And under this ambit, we are tasked or looked at issues to do with financial inclusion, making sure that we create a platform or making sure that we create a platform where we can promote financial inclusion. We also conduct various awareness campaigns and sensitization aimed at improving financial education. So we've actually identified or have got different groupings, from the children to the youth to the working groups, etc., so that each one has got a specialized awareness project that is run for them to ensure that we try and improve the levels of financial education. Under market development, we also look at product development. So the Commission also tries to ensure that they promote and support an environment where we can foster product development and various innovations that come from the market. We also conduct research to make sure that we are up to date with the happenings in the financial sector, not just within our country, but at a global standing as well. So just to highlight the vision and mission of the Securities and Exchange Commission. So our vision is to be a capital markets regulator that offers a conducive market environment for raising long-term capital needed for a thriving economy. Our mission is to stimulate the expansion and growth of the capital markets in order to make a sustainable and significant contribution to the economic development of our country. What are the objectives of the Securities and Exchange Commission? So I should mention that the Securities and Exchange Commission is actually a member of IOSCO, which is the International Organization of Securities Commissions. So it is a global standard setter for all securities, or for the securities sector. And so our objectives are actually in tandem with their objective for securities regulation. So there are under 3 pillars, which are investor protection. The second pillar looks at fairness, efficiency, and transparency. And the third pillar is a reduction of systemic risk.
Oh,
so, sorry? So, just help us to mute. Okay, so under the first pillar, which is investor protection, mainly what is under this pillar is us making sure that there are various rules and regulations that are tailored towards ensuring that investors are protected as they take part in the securities sector. So we've got various rules and regulations that our capital market operators have got to adhere to. And these are not just regulations which are specific to the securities market. We also take cognizance of others, such as the Companies Act. We also have the Compensation Fund. We also have the Lucent Listing Rules, which which includes the Code of Conduct Rules as well. So all players on the securities exchange, or anyone that wants to list or register their securities, would have to ensure that they are adhering to these rules. We also have a Code of Corporate Governance Conduct, so that our market players adhere to this as well. So the overarching in the investor protection pillar is our Securities Act, which has got a number of rules and regulations which are tailored towards ensuring that investors are protected in the market. To mention a few, we've got the Code of Conduct Rules, we've got takeover and mergers rules, as well as advertisement rules, just to mention a few. Under the second pillar, where we are looking at ensuring that there is fairness, efficiency, and transparency in the market, we do work to ensure that there is equal access to information. So we strive to ensure that we have got information symmetry in the market, so that investors, players are all able to make informed decisions based on the fact that they've got readily available information at the same time. We also make sure that there's efficacy of price setting mechanism and the extent of liquidity, so to ensure that we strive to have a liquid market. We also have mandatory disclosure requirements by all our capital market operators, so that we can have fraud prevention strategies and fairness also in the fairness and enhancement strategy. Looking at our third pillar, which is the reduction of systemic risk. Under this pillar, we ensure that players in the markets are monitored to ensure that any failures are detected promptly and their impact is limited. So if there's anything that has actually been identified in the market, we would need to come in so that we make sure that the impact is limited and does not spill over to the other market players and ultimately the financial sector as a whole. Under this pillar also, we look at licensing of market players within the markets to prevent undesirable actions. So anybody who operates within the securities sector needs to be licensed by the Commission in order to do so. Then we also have an adapting regulation, which makes sure that we also are up to date with the happenings of the within the financial sector. So to also just give an overview of who we regulate. So we've also classified them into three. The first batch looks at the issuers. So anyone who issues securities in the securities sector is regulated by the Commission. So we've got listed companies, quoted companies who you would find on the Securities Exchange currently, the Lusaka Securities Exchange. So all companies that are there are regulated by the Commission. We also have other issuers that may issue debt instruments, such as medium-term notes, corporate bonds. All those are also regulated by the Commission. We also have depository receipts that have been issued in our market, so we also get to regulate those. The second grouping has got licensees, so mainly the market infrastructure with our stockbrokers that fall under this category as well. We get to regulate them. We also have dealers and representatives. So an institution can get a license as a dealer, and it will also have people that are actually operating under it and dealing directly with the public with regards to securities. So those would actually require to have a license from the Commission. So we do get to regulate the dealers and representatives, as well as investment advisors and their representatives as well. We also regulate the Central Securities Depositories, which is the CSD. And the third grouping, where the Collective Investment Scheme falls, there we regulate the fund managers who are currently managing over 34 funds. We also have 2 custodians in the country, as well as 1 trustee, and all these are regulated by us. So as we get further into the presentation, my colleague is going to drill further down so that you can get an understanding of these different groupings. So to get into the second part of our presentation, now we get to look at our Zambian capital markets. So to give a brief description, capital markets basically provide a platform where entities can come and raise long-term capital through various products, which are mainly split into either debt instruments or equity, which can be shares. And the markets are split into primary markets where the initial issuance is done, as well as secondary markets where onward trading then happens. So to give you an overview of what the capital markets universe looks like, we have the diagram that is showing right now. So when you look at the middle of the diagram there, we have where capital markets are sitting with the 2 markets under it, which is the debt markets and the equities markets. So under the debt markets, we find instruments such as bonds, and under the equities market, we find instruments such as equities. So as we are looking at this universe, on the left side, you get to see the supply side of the capital markets. So the supply side will come to the market and issue the different instruments, which could be shares or which could be bonds. And this could be done either by your national governments or subnational governments, as well as the corporate institutions. So they'll come to markets because they want to raise finances. So these are the ones who fall under the supply side. When you look on the right side, you then have the demand side. So these are now the investors who will come and who have this capital that they bring to the market so that the supply side can actually have access to this capital. So we've got both domestic and international investors, and these are also categorized under institutional investors as well as retail investors. So even an individual like myself can actually come to market and fall under this demand section. Then outside of this, as all this is happening, it does not just happen between the suppliers and the people on the demand side. So there's all these other players also that are in the securities, in the capital markets universe. So at the top there, we have enabling structures and functions. So these are the structures that are in place to ensure that they enable the functionality of the capital markets. So for example, we've got capital markets credit ratings. So this will help people out there to actually make informed decisions. For example, if I want to invest in a certain company, I will need information for me to be able to make an informed decision. So where do I go and find this information? So it is under these enabling structures where I'll be able to go and then get to find this information that I will need. Not only that, you also want to know who is coordinating the capital markets, or who do I go to if I want to buy shares in Zanaco. So it is these additional pillars also where you will be able to then have access to the capital markets. So you've got the various capital market infrastructures, such as the securities exchange, where the actual trading of securities is done. So instead of you having to go to an individual company to go and buy shares, you actually find these platforms where you can go and then be able to make your investment. We also have securities indices, capital market skills and capacities, as well as capital market instruments. When you go to the bottom, so the top pillar is actually on the left side, you see that it's private sector as well as the government. When you go to the bottom of the diagram, where you find the regulators as well as the representative bodies, you now find the rules and regulations that govern this capital market universe. So for it to be able to perform, in a manner that is acceptable, it will have to do so under the different rules and regulations that have been designed through the capital markets legal framework. And these are aimed at fostering investor protection and ensuring that they are setting and enforcing the rules that they need to adhere to. So we have the various capital markets norms and standards, the listing rules, as well as the corporate governance criteria. So to give a brief timeline of the key securities legislation in our country, so we had the first Stock Exchange Act, the 1970 Stock Exchange Act. Before the presentation, we're joking with my colleague Benson that, we're actually going to have people in this presentation that were there at this time, and we were not even born. But yes, so we do have the Stock Exchange, the 1970 Stock Exchange Act, which at the time was just a statute in the books, but had no accompanying structures that would have led to its enforcement. And during this period, we actually had companies that were candidates for listing, but they were already state-owned. So it wasn't really operational. But sometime 20 years down the line, and during that period, our economy had deteriorated somewhat. And so discussions of privatizations, I think, were happening, as this was seen as one of the antidotes that was needed to correct the economic situation. So at this time, the Stock Exchange Act then was enacted. I think there was one, a 1990 Act that was enacted to provide the legal framework of the stock exchange market, because at the time this was seen as an important institution in the privatization process. We had the Privatization Act in 1992, which necessitated or led to the privatization of a number of state-owned institutions at the time. So this 1990 Act, actually, after a national seminar was held sometime in 1990, they analyzed this act and they identified that a number of statutes were needed to be amended in order for it to be operationalized. And this resulted in it being repealed and replaced, or rather the enactment of the Securities Act of 1993 was then done. In the same year, the LUCE was also created, and it began its operations in 1994. Years later, 2015, LUCE decided or resolved to demutualize, and the following year, we also had the Securities Act Cap 354 of 1993 repealed, and this was replaced with the current Act, which is the number 41 of 2016, which is the new Securities Act. For me, the Act is...
What you're doing is that?
Instead of what?
I suppose so.
Sorry, Stanley, did we lose Leah? Can't tell if it's
Leah.
my network. Or
Leah,
is it Leah's?
can you hear
Okay.
me?
I think
Okay,
we
just a
lost
minute.
her.
Just a second, we're trying to get her back.
Okay.
Okay, I think it's a network issue from her side. She'll join us just in a minute or so. Okay, I can see her coming back. Yeah.
Not now, because I'm preparing for a meeting. I'll go in. As in, you mean the chicken? Yeah. I'll go later.
Hi, so sorry, I must have lost network, but I'm back. Sorry about that. Just share the screen again. Okay, so I'm not sure at which point you lost me. Is it showing? Okay. All right. Okay. So yes. So now we have the new Securities Act, which was enacted in 2016, and currently we've got about 23 listed companies that are on the Securities Exchange. Just to show, this just gives you a pictorial show of the companies that are listed on our exchange. So they are derived from various sectors, from manufacturing, mining, telecommunications, the financial sector itself, represented by the banks, the energy sector, real estate. So yes, so we have a number of companies that are on the exchange. The most recent was the listing of Zafico, that's the Zambia Forestry and Forest Industries Corporation of Zambia. So earlier in the presentation, I spoke about capital markets being a platform where companies can actually raise capital. So this slide just goes to show, I'll give an example of some of the companies that have actually raised capital from our Zambian market. So you can see there amongst them, we've got the likes of Baobab School, who raised $1.5 million on the market. We've got some banks that have also been able to raise finances. We've got Airtel, Celtel then, but Airtel now, who actually raised the biggest amount of $665 million in an IPO that they're done when they came to market to list their shares. We've got an international organization, which is the IFC, that actually issued a local denominated debt instrument tailored at trying to deepen liquidity in our market. So we do have a number of companies that have actually raised capital on our markets. So at this point in time, I will hand over to my colleague Benson, who is going to take you through the remaining part of our presentation. So I'll just give him a second so that I could stop sharing and then, oh, okay. Over to you, Benson.
Thank you very much, Leah. I'll just pick it up for the final stretch of the presentation. Let me just share my screen. Okay, so we'll start by just taking a quick glance at the LUCE. And this is as at February 2021. So the market cap in Kwacha stood at 23.4 billion, while the market cap in USD terms stood at 1.07 billion dollars. And as Leah mentioned, we had 23 counters listed, and the all-share index, the Lusaka all-share index, which is the index that is used to track the performance of the LUCE on a year-on-year basis. So from February 2020 to February 2021, shed off 6.27%. In terms of domestic versus foreign participation, we had foreign participation accounting for 41% of the market turnover as at February 2021, and domestic investors accounted for 59% of the transactions. Now, in terms of just a historical perspective or review of the performance of the LASI, we can see there, and this is from 1997 when the index was established to date, 2021. We can see that the trend has generally been upward, obviously with some decline starting to be noticed somewhere around 2015 coming forward. And if you may recall, 2015, we had a number of events that were happening that were sort of setting a trend for the macroeconomic environment. I think one of these were the droughts that we experienced due to the El Nino effect, which then led to power challenges that the country faced. We also noticed that around that time, I think we're having elections because we had lost President Michael Sata. So obviously, all of this had an impact on the macroeconomic environment, and then you saw this sort of being translated into the market's performance. And we saw a similar picture in the bonds markets as well. So here we just looked at the 5-year bond, which we used as our benchmark bond in terms of the yields from 2014 to 2020. You can see that they've also sort of been upward, and there's a sort of turning point from 2017 there, where you notice that the yields start going up. And obviously, bond yields increasing then signifies that bond prices are declining. And the decline in bond prices then obviously speaks to the fact that demand for these particular instruments is waning. Obviously, then this links to how investors are perceiving the outlook for the macroeconomic environment. And again, it's speaking to the challenges that we started to sort of experience after 2015. So in terms of the market outlook for 2021, we expect that the economy is expected to start picking up in terms of getting back onto a growth trajectory. We noticed that obviously we're coming from 2020 where the economy was badly hit, particularly by the effects of COVID-19. We expect that it will contract by 4.2%, which is quite significant. So 2021, we expect growth to sort of get back into the positives. But again, nothing too significant. This is just minimal, probably in the region of 1 percentage point. And obviously, again, this is largely hinged on how the COVID-19 pandemic pans out hopefully with some vaccines starting to come in, we hope that the situation will be managed, and then this will help consolidate the growth position. But obviously this is expected to support equities and bond market activity. However, it's also important to mention that interest rates are expected to rise. And this is obviously with the anticipation of increased government activity within the local money markets. And also then this has an effect on the cost of capital or the cost to raise financing locally for local firms. So obviously if interest rates are going up, it becomes more expensive for firms to raise financing. But also then on the inflation side of things, we see that inflation is expected to continue being relatively high. And this is mainly owing to the pass-through effects of the exchange rate depreciation that we've currently been observing. And obviously then higher inflation rates have an effect on the real return that investors get for their investments. So it then has a bearing on how attractive these instruments that are offered in the capital markets are to investors. So these two obviously will then be headwinds against the performance of the equities and the bond markets. But ultimately, it's expected that the market should improve in terms of performance from its performance in 2020, albeit this improvement, we don't expect to see it getting back to the levels of previous years. And I think this will probably be only until we see additional stability in the macroeconomic environment. As we all know that the macroeconomic environment has a significant bearing on how the capital markets perform. Okay, apologies for that. But at this point, I will then go into the next part of the presentation, the last part of the presentation, which is really just looking at the products that are offered within the capital markets in Zambia and that you can have access to. So really there's 4 categories of products. We have stocks or shares, as they can be called. We also have collective investment schemes, abbreviated as CISs. We also have bonds, and we have a number of services that are offered within the capital markets. Now, I'll just go into a bit more detail in each of these to just shed more light on them. So regarding stocks or shares, these essentially just enable you to be a part owner of a company in which you invest in. So obviously this company has to be listed for it to be able to solicit capital from the public. And you can buy these shares through a regulated or registered stockbroker. So these would be regulated by ourselves. So they can help you in terms of the whole process of how to go about buying shares. So you can open an account with them, and then they'll also be able to provide you with advice in terms of which shares you can probably consider buying based on what investment objectives you're trying to meet. Now, there's 2 main ways you can make a return from shares or investments in shares. The first one is through what's called capital appreciation or capital gains. This is really when the value of the shares that you buy appreciates. So if you bought shares this year, for example, at 1 kwacha per share, and then say 3 or 4 or 5 years down the line, the same shares are now trading for 5 kwacha. It means that difference, that 4 kwacha, is what is known as capital gains or capital appreciation. And you can obviously realize that by selling some of the shares and realizing this profit, quote unquote. And then just to mention that in Zambia, you're not charged any tax on capital appreciation. So everything that you gain through capital appreciation is due to you. In other markets, other more developed markets, there's usually a tax that's attracted by capital gains. And the other way that you can earn a return from your shares is through dividend income. So if the shares of a company that you're invested in, a dividend is issued to particular holders of those shares, then you get to stand to benefit as a shareholder. There's also a number of roles that you can play as a shareholder or benefits, I would call it, by virtue of you being a shareholder. And one of these is being able to participate in annual general meetings of the companies in which you hold shares. And in doing so, you can also participate by voting in the various decisions that the company is needing ratification from shareholders from. The other thing is that you are entitled to being informed. So it's mandated of issuers of securities, including listed entities, to inform their investors of any information that is price sensitive or that can lead to a price change in the securities that they've issued. This includes mandatory disclosures like issuance of financial statements. So these are both annual and interim, and any other announcements that investors need to be made aware of that could have an impact on the price of the securities that they have issued. Locally, we usually see adverts in the paper from listed entities, for example, and there's also a service called the Securities Exchange News Service, the SENS, that the Lusaka Securities Exchange operates. And you can subscribe to that if you're an investor, and you get various announcements related to these listed entities. The next product is bonds. So bonds are really just a security that represent a loan from an investor or investors to a particular entity, who in this case would be the issuer of the bond. So there's really different types of bonds, but the main ones, the main two categories are either corporate bonds or sovereign bonds issued by a sovereign state, like Zambia, for example. Bonds are fixed income securities. So they're fixed income securities because they guarantee you a certain amount of cash flows for the lifetime of the security. And by guarantee, I mean that, not that there's no credit risk involved, but by guarantee, I mean that you know exactly what cash flows are going to come your way when you're invested in this particular bond. So if you're invested in a bond that pays a 10% coupon for 5 years, so you know that every year you're going to get 10% of whatever amount that you've invested for that bond, and you can plan accordingly. So this is what is meant by fixed income securities. Now, there's two, essentially there's a return that you get by investing in bonds, and this is known as the yield. And the yield is made up of two components, right? So these two components, the first one is what is known as the discount. So the discount on a bond is the amount that you pay less by of the bond's face value. So when you're buying a bond, so for example, hypothetically, it's for 100,000 kwacha, you won't pay 100,000 kwacha for that bond. What you do is you pay a discount. So you pay something like, say, 97,000 as the price of the bond, right? So the difference between the face value, which is 100,000, and the amount that you actually pay, the 97 in this case, is what is known as the discount. So at the end of the bond's maturity, you're going to get back, you paid 97 at the beginning, but at the end of the bond, you'll be paid back 100,000. This is the hypothetical example that I've mentioned. So that's the discount. So that's one component of the yield. The other one is the summation of all the coupon payments. So coupon payments you can think of as interest payments from the bond over the total tenure of the bond. So if you've invested in a 5-year bond and it's got a 10% coupon, so that means for every year you're going to get 10% of whatever you invested in terms of the face value up until the end of the bond's lifetime. So if you sum up all of those, add up the discount as well, you'll be able to get the yield of the bond. So bonds can be bought in both the primary market, which is at initial issuance. So for example, from the Bank of Zambia, when the government issues out the bond initially, you can buy them there, or you can buy them subsequently in the secondary market, where these bonds that have been bought in the primary market are subsequently traded by those that feel maybe they need liquidity, or for one reason or the other, they want to dispose the bond. You can buy it in the secondary market. Now, how do you buy bonds? Really, there's two main ways. In the primary market, you can either go directly through the Bank of Zambia. If you call them, they have a financial markets department. They'll be able to assist you in terms of what you need to do to invest in bonds. The other way is to visit your bank. most commercial banks have a treasury desk where they'll be able to assist you in purchasing these bonds. In the secondary market, you can talk to your bankers as well. They'll be able to assist in helping you be able to sort of purchase bonds in the secondary market. And then the other product is collective investment schemes. Collective investment schemes. So these go by different names depending on where you are. So in some areas they're called mutual funds. In some places they're called unit trusts, and in others they're called collective investment schemes. But it's really just the same thing. And these allow investors to indirectly invest in securities by investing in a scheme or a fund that's managed by fund management companies.
Sorry to chip in or to distract you when you're actually explaining. I just thought of sharing this diagram just so you can enhance what you were talking about in terms of the products which are in the capital markets. So we have, I'll just share this diagram quickly, which just tries to show the returns. Trying to just give a comparison. Are you able to see it?
Yes, we are.
Okay. So when you look at this diagram, it's basically just showing you or trying to make you see the returns in comparison to. So when you see the red line that's at the top there, that's actually the Luce All-Share Index. Looking at annualized returns over a period of time. So from 2006, or is this 2016? Yeah, 2006 to 2021. So when you look at the graph there, there's a comparison of the LASI, looking at also the Zambia, the kwacha to the dollar. You also have the 180-day fixed deposit returns. So looking at the diagram, you tend to see that over a longer period of time, the returns actually from the LASI have actually been higher than the others. So when we talk about capital markets being long-term, at the back of the mind, at the back of our minds, this pictorial sort of just tries to bring it all in to see, to say, over a longer period of time, this is what the graph actually looks like. Of course, since last year and now we've taken quite a hit, but when you look at it overally from, I think, 2006, you can see that the returns have actually been on the higher side. Sorry, Bess, I just thought to bring that in just to enhance what you were talking about. So you can continue.
Thank you very much, Leah. And I think that really provides a very important comparison for investors. Let me just continue to share my screen. Okay, thank you. Can you all see my screen?
Yes, Benson, you can go ahead.
Yes, thank you. Thank you. Yes, so as I was mentioning, the collective investment schemes, so these can be called mutual funds or unit trusts, depending on where you are. And these enable investors to invest indirectly in securities by investing in a scheme that's managed by fund management companies. So as you saw in the graph that Leah just shared, there was like a number of different asset classes from the stocks, which I think clearly outperformed over the long term the other classes that we had showed on the graph, to bonds, to currencies, for example, like the Zambian kwacha USD pair and that sort of thing. So these funds enable you to be able to make investments indirectly into such type of asset classes. And these fund management companies essentially pool funds from various investors and invest these funds on their behalf into these different asset classes. And the aim is really just to benefit from the advantages of collective investment, or the power of numbers in this case. So for example, the ability to be able to negotiate better rates for particular investments or assets, and also the ability to spread risks amongst a broader range of investors, as opposed to you sort of concentrating your investment by yourself in a particular asset. And obviously these schemes are governed by various sets of rules and systems that we're going to just touch on briefly in the next few slides. So this is really how the structure of the collective investment scheme is currently. So we have three players: the fund manager on the left, the trustee on the top, and then the custodian on your right. So the fund manager's role, as I had mentioned earlier, is really just to make investments on behalf of the fund and on behalf of the investors in the fund. The trustee's role is to be the owner of all the assets of these collective investment schemes on behalf of the investors. And the trustee's role is also to make sure that investors' interests are protected in this whole collection. The custodian, and these are usually banks, their role is really just to make sure that the assets of these collective investment schemes are kept safe, and they hold custody, as their name states. They hold custody of these assets. So if a scheme, for example, is invested in property, the custodian will make sure that all the documentation related to that property that the scheme is invested in is held with them on behalf of the trustee, who then holds it on behalf of the investors. So it's a three sort of tier model that we currently are running with. So at the moment, we have 10 umbrella funds, 10 umbrella unit trusts in the country, and these are listed on your left there. And on the right, we just provided a pictorial representation of the market share based on assets under management, and this is as at December 2020. As you can see, I think the biggest chunk is taken up by Mpile, which is run by African Life Financial Services, and then we have ABC Unit Trust with 20%, and Madison Unit Trust with 17%, and the remainder split between the rest of the participants. Now, in talking about unit trusts, I think it's important to also mention how the unit pricing is done. As I mentioned, when you invest in a scheme, you are essentially buying into it. So you buy a participatory share or a participatory stake in this particular scheme. So how the pricing is done is through a mechanism known as net asset value. And this is as per the prescriptions of the Securities Act. So net asset value is really just the particular fund's total assets less the total liabilities. So once you get the net asset value, you just divide that by the total number of units in issue, and you get what is known as the unit price. So depending on how the fund performs, whether its assets are going up or down, the unit price will also then fluctuate in tandem with this. So that's really the unit pricing. So when you're investing into a unit trust, you buy units at the prevailing unit price of that particular day. That's how the pricing is done. And in terms of the services within the capital markets, they're really classified into three categories. The first one is the broker-dealer services, and these just support investors by assisting them in dealing with securities. So I mentioned the banks, for example, who, if you wanted to purchase government securities or corporate bonds in the secondary market, will be able to assist you to do that. So this is an example of dealer services. Also, the stockbrokers that help you be able to buy shares on the exchange, for example, are examples of broker services. The others are investment advisors. So these help provide investment advice to potential retail investors. These will be able to help advise you on how best to invest. So if you've got money and you're not too sure what you can invest in, or there's a financial objective that you want to meet. So for example, your son is going to university in the next 10 years and you want to be ready for this event when it occurs financially. You can visit one of these and they'll be able to do an assessment and then come up with a plan with you on how best you can meet that objective. So that's a service. There's also fund management as well. And this is really the provision of fund management services on behalf of various entities. So this includes pension fund management, management of gratuity schemes or gratuity funds, and that sort of thing. Now, in talking about the various products and services offered within the capital markets, we also felt it prudent to provide a warning for investors to beware of scams and fraudulent schemes. So there's been a rising number of scams and fraudulent schemes within the financial markets, and everybody, especially the investors, have to be aware of these. And we just thought we take you through a few signs, telltale signs that you can look out for some of these products that people might approach you and be offering as prospective investment opportunities. So these are just some of the signs that you can look out for that should tell you that maybe, you know, this product I'm being offered could be a scam. So the first one is that you're promised a high return, a very high return with little or no risk. Someone tells, you know, give us 1,000 kwacha, and, you know, by Wednesday next week, we'll give you 5,000 kwacha. And you know, it's a guaranteed return. That should be a telltale sign. The second one is if they are not registered to sell the particular investment that they're selling. You ask them who they're registered by and they're not able to give you a straight answer. That's a telltale sign that it could be a scam. The third one is unsolicited and usually aggressive approaches. So either by phone or text or emails or even in person, by these promoters of these particular schemes, trying to get you to invest. You then should probably have some alarm lights going on off in your head because it could be a scam. And over the years, I've sort of used this as my golden rule when I'm assessing investment options. I don't know who said this, but I found it very useful, and I thought of sharing, and I think it will probably be quite useful to you as well. The next time somebody is offering you an investment opportunity and you are not too sure what to do. So if the quote goes, and I quote, if it sounds too good to be true, it probably is. If it sounds too good to be true, it probably is. So please just remember that and run it through your head the next time somebody is offering you an investment opportunity and you feel that you're not too sure about it. Now, how can you avoid being scammed? There's a few tips that we've provided here to just help you as you appraise the various investment options or propositions that are thrown your way after we leave this discussion here today. So the first one is ask questions. Ask questions. So just make sure that you are explained to how exactly this particular investment opportunity works, and you are comfortable with the information that's being provided to you about the service or the product and how it works. This is very important. Secondly, you also need to ask the provider if they're licensed to provide the service or the product that they are selling to you. So if they say yes, okay, we'll move to the next step. If they say no, I would advise you to not invest in that particular product because that means really that you don't have any recourse and there's no way of you verifying that these guys are legitimate as they claim. So if they do say that they're registered, there's no harm in you picking up the phone and calling the regulators. So we have 3 financial sector regulators in Zambia, the Securities and Exchange Commission, the Pensions and Insurance Authority, and the Bank of Zambia. So if they tell you that it's one of these, you can call them, call the regulator and ask and verify that indeed these individuals are licensed to provide this product, and they're licensed by the regulator as an entity. And the last one is, if possible, seek the services of licensed investment advisors to assist you in providing you with valid and legitimate investment options. There's many times where people maybe might have some lump sum of money, either from retirement or from savings or whatever source, and they're not too sure how best to invest it. There's no harm in seeking the services of a professional who is licensed and who will be able to provide you with legitimate investment options, as opposed to falling prey to these scammers and pranksters out there. So we hope that this will help you be able to avoid being scammed and losing your hard-earned money after this discussion we just had. My final slide is really just taking a quick look at some of the capital market developments that the Commission has been churning out. As has been mentioned in the preamble by the Director, there's been a lot that's been going on at the Commission in terms of trying to help us be able to contribute more towards meeting our objectives and our mission and our vision. So these are some of the projects that we've been able to undertake and continue to undertake in helping us be able to make sure that the capital markets are robust and that their potential to be able to contribute significantly towards economic development in Zambia is realized. So the first one is the risk-based supervision framework. So this really is a framework that is pivoting the Commission away from the more traditional rules-based supervisory approach to the more contemporary risk-based approach, which is more efficient and also more effective in terms of ensuring that capital markets that we regulate are safe. The other one is the capital markets master plan that has already been alluded to by the Director, so I won't really touch much on. And the third one is the green bonds framework. This also, we launched these guidelines in 2020, and they essentially allow or provide an enabling environment or a framework for the issuance of green bonds. And as you can see, we're then trying to position the capital markets to be able to participate in the sustainable financing agenda that is currently ongoing. The last one is the FinTech Regulatory Sandbox, which is another fantastic initiative. And this is really aimed at marrying regulation with financial technology innovations and pairing the two to help be able to meet some of the challenges that the capital markets, the financial markets, and the country at large is currently facing. At this particular point, I would like to thank you all, ladies and gentlemen, for your attention. And I would like to invite any questions, contributions, and comments that you might have regarding the presentation that my colleague and I just made. Thank you.
Thank you, Benson, for that presentation. Thank you, Lee, as well, for the insightful presentation. We have quite a number of questions in the chat, and we have the whole SEC team on hand to take these questions. So I'll start with the first question that I have from my end. Chapita Mbuzi is asking, what's the SEC doing to assist in improving liquidity on the LUCE? Are the corporate bonds accessible to retail investors? What is SEC doing to help SMEs raise capital on the capital markets? And then the other question says, our capital markets are not as sophisticated as South Africa. What is SEC doing to ensure that the capital markets have an array of products just like those on the JSE, that the JSE has, or the NSE? We can start with those questions. I'll ask the SEC team present to take the first questions that we have.
Yeah.
Android.
Okay, I'll ask the presenters. Benson, you could start with the first three questions that I just read out.
I can actually go first. Benson is having a bit of a tech challenge. So the first question what is the SEC doing to assist in improving liquidity on the LUCE? So I think under our second mandate that I spoke to, the market development mandate, this has been also one of the things that we have been trying to do in order to improve liquidity. And we've been trying to engage it from two perspectives. So on the one side, we have actually, firstly, we got to realize that the financial literacy levels were quite low on the capital market side, as well as also the uptake of capital markets products, or should I say, people taking part. So what the Commission has done is actually they introduced a number of awareness activities, which were aimed at firstly trying to improve the financial literacy levels, so that in turn they could then sort of improve the capital market participation by investors as well. So we've had a number of engaging activities with the public so that they could learn more about capital markets and then also just try to take part as well. On the supply side, this is where we now look at also ensuring that there's actually products on the market. There's a number of developments that have been done as well. I think the last slide for Benson also just tried to showcase some of the, for example, when we look at the sandbox regulation, which was just launched, is it a few days or weeks ago? So that is aimed towards ensuring that we can have more capital market players on the market. And in turn, this should also try and help to improve liquidity. We also have the Green Bonds Framework, which is going to be launched soon as well. So that one is also aimed at ensuring that investors that are more interested in investing in products which are centered around impact investing are also covered from that end. So I think from that standpoint, those are the various activities that we're trying to do as a SEC to ensure that we try and assist in improving liquidity on the LUCE. So mainly to really just help with what the LUCE is already doing in that space. For the second question, are the corporate bonds accessible to retail investors? Yes, they are. Yes, they are. I think what maybe just in the corporate bond space, and please, Tim, feel free to chip in. We've not had a lot of corporate bond issuances, mainly based on the fact that when you look at returns or yields on the benchmark securities in the banking or the financial sector, you find that they tend to be on the higher side. So we've not had a lot of corporate bond issuances, but in terms of accessibility to retail investors, yes, they are. And what is SEC doing to help SMEs in raising capital on the markets? I think my colleague can also chip in.
Yeah, so in terms of what SEC is doing to help SMEs in raising capital, we are trying to, well, amongst other things, I think there's a lot happening, but amongst other things, there's also been a deliberate attempt by ourselves to ensure that we support the development of alternative financing platforms, so alternative financing products. So for example, crowdfunding is one of them, and this is directly linked also to the fintech regulatory sandbox that I spoke about. So it's initiatives like that that will enable innovations like crowdfunding platforms that we can test out in the sandbox, and if we are able to be satisfied that the risks and all the various attributes that they come with can be managed and mitigated, we can then be able to promulgate regulation or a regulatory framework that will be able to assist in getting these sort of products out. So, for example, the Securities Act actually designates crowdfunding as one of the activities that the Commission regulates. So we're in the process of coming up with regulations to provide that regulatory framework to enable that other avenue to be explored as well for SMEs to be able to raise financing. This also goes in line with other activities like venture capital, for which we're currently working on regulations to sort of be able to provide that regulatory environment or framework that will be able to then assist SMEs in being able to raise capital within the capital markets. So those are some of the initiatives that we are undertaking in terms of assisting SMEs raise capital in the capital markets.
Thank you, Benson. I hope that answers the question, Mr. Chapita. We have another question for Mr. Chapita again. It says, does the SEC regulate government bonds? And then the one about the products or the sensitization, I think that has been touched in Benson's response and Leah's response just now. Then there's a question from Solomon. Is there a website where we can access information on government bonds, tranches available to buy, and yields and all? Now, then the third question from Chapita again says, does the SEC regulate the OTC market? Benson, would you like to take that as well?
Yes. Sorry, Stali, I didn't hear the one on green bonds.
No, not green bonds. It's government bonds. Does the SEC regulate government bonds? And then is there a website? Yeah, for the government bonds tranches.
Okay, great. So yes, the SEC regulates the government bond space, but I need to sort of explain. If you saw in the presentation, there's two parts of the government bond market. There's the primary market, which is where the initial issuances are done. So that aspect is overseen by the central bank, the Bank of Zambia. So the SEC regulates the secondary part of the bond market. So after they're issued, if they're then on-traded by these investors that purchase them in the primary market, that's the space that the Securities and Exchange Commission regulates. So we regulate the secondary market of the bond markets. On whether we regulate the OTC market, so yes, the OTC market for the bonds in terms of the secondary market trades falls under the regulatory ambit of the Securities and Exchange Commission. And I'm sure you see these trades if you look at the reports from the.
I'm not sure, Sefali, did Benson break off? Or is it me?
I think it's
Hello?
just we can hear him. He's actually on the
Can you
floor
hear
right
me?
now. Yes, Benson.
Okay. Yes. So in terms of if you look at the information that the Lusaka Securities Exchange publishes, there's actually information there on the bond trades as well. And these are all OTC because currently we don't have any standardized market or exchange in terms of an electronic trading platform where these bonds are actually traded. So currently the trading that's happening in the secondary market is done over the counter, but this too is regulated by the Securities and Exchange Commission.
Sorry, Ben, did you want to just shed a bit of light to just explain our oversight on all commercial banks that deal in secondary trading and the framework that we have in place thereof?
Yes. So as mentioned, all securities dealers within capital markets are regulated by the Securities and Exchange Commission. So actually it starts from there. So anybody that is then dealing in these in the secondary market for bonds is regulated by ourselves. And we also have a framework in place that regulates this particular activity in relation to the fees and also the disclosures that have to be made in relation to these particular trades in the secondary market.
Okay, thank you, Benson, for that. We have a comment from Mr. Chapita that goes on to say, from the diagram, it's evident that investing in USD is more profitable than investing in capital markets. Mr. Chapita, I'm assuming this diagram is the one that Leah had shared where we are showing the LASI against the other market trends, right? Maybe Leah would like to speak to this.
Okay, so maybe just to also give context, I'll just reshare it again. So I think from the, oh wow. Okay, so looking at that diagram, I was trying to give, can you hear me?
Yes, we can. Maybe you can just reshare your screen. Yeah, okay, thanks.
Okay. Okay, so I was trying to showcase looking at over a longer period of time. Can you see the screen now?
Yes.
Okay, yes, so I was, when you look at it from 2006, you can see that the LASI was actually outperforming most of the others, but only when we got down to, I think, mid 2019 into 2020 and 21 is when the currency has actually taken a hype or an increase. But when you look at it over a longer period of time, I think you can see that the performance of the LASI actually outperformed the other comparators. So I just thought maybe to reshare it so that it could be more clearer.
Could I come in on this diagram, maybe just to provide further information? Is that okay?
Yes, please, Mr. Stalo. Thank you.
Just for the benefit of maybe those that are investing in property, the Commission is also looking at the possibility of tracking the returns on investments made in property. So we are speaking with various market players that have an interest or are experienced in the collection of data that we can track in a similar type of way. So far, I think preliminary studies appear to suggest that property returns would be probably below most of these tracked indices. So if anybody from the DK group is listening in and they would be interested to participate to provide information that we could help to track returns on property, to be very, very good. Because it would be good for the market to see whether all these investments we're making in property actually measure up to other investments. So maybe explains why Zambia is poor and other countries are richer, because maybe we are putting money where it shouldn't be going. I just thought I provide a bit of information on that.
Thank you for that, Mr. Chitali. Mr. Chitali, over to you. I don't know what the next question.
Okay. Next question is, where can one access unit trusts, and then does SEC have oversight over what is SEC doing in the capital market, make it accessible for everyone, every Zambian? I think this was touched on. And then does the SEC have oversight over the commodities market?
So for the first question, Sitali, where can one access unit trusts? So we do have a number of fund managers. I know from our website, one should be able to actually find the list of all the fund managers. Also on I think we also have the organization Capital Markets Association of Zambia, which was actually just recently granted SRO status by the Commission. I think there would also be good to contact in order to get the different contact details for the fund managers. But yes, so the fund managers are accessible. So you would get their contact details from our website or our annual reports. And yeah, you could just get to one of them and get talking to just get more information on what it is they actually provide. Then the other question, what is SEC doing to make the capital markets easily accessible to everyone in Zambia? I think this one also has been covered in the various activities that we earlier alluded to that the Commission is doing in order to promote market development. Does the SEC have any oversight over the commodities market? You want to take that? Okay.
Yeah, so on the commodities market, there's two aspects of the commodities market. So the spot market, where the actual physical commodities are traded, the Commission doesn't have any regulatory ambit over that. But then once these commodities move into the futures market, so where you start then trading derivatives that have underlying assets being commodities, the Commission, the Securities and Exchange Commission, then has the regulatory oversight over that, because then these then become securities as per the definition provided in the Securities Act of number 41 of 2016. So the spot market of commodities, we do not regulate, but then the derivatives markets of these commodities, or derivatives markets where commodities are underlying products, the Commission has regulatory oversight over. Thank you.
Could I also come in on that? Just under a minute. I think the simple issue is one has to look at is whether it's a financial instrument. Is this a financial paper that can be traded? If it's not, then we do not regulate. If somebody is selling, like we're going to the harvest season, by the roadside, they are selling their maize, matava, mapopoe, whatever it is called, by the roadside, we are not into that business. But if you put your maize in a storage, create an instrument, let's say a paper, and decide to sell such a paper, then it will be defined, or it will fall within definition of the definition of a financial instrument. So I think that's what my colleague is talking about or referring to as a derivative, because the value of such an instrument or such a paper depends on the maize in the warehouse. So it becomes a derivative, or basically it represents some value in another asset or so. So that's where that's where the risks are, because if you can see the mataba by the roadside, give cash to the person who is selling and they give you a bag of maize, you'll probably make an informed decision whether to buy or not. So there's maybe reduced risk. But if somebody were to promise you to deliver a load of maize in 3 months' time, then there's risk. That's the security being created, and the Securities and Exchange Commission comes in. In terms of development, I think colleagues, where the market should be going to guarantee production and everything else is in the futures market, where we are promising to deliver wheat or soybeans or goats in the future. That will guarantee market growth, and maybe that's a discussion topic for another day. I thought I'd just provide that clarity.
Thank you, CEO, for that. Our next question is from Moses, asking for a comment on village banking. The village banking concept that is quite popular with the masses, and if SEC is developing anything to promote and regulate them.
Maybe I can take that one. Leah,
Okay,
don't
thank
mind.
you. Okay.
So on the one on village banking, right? So
Yeah.
okay, so maybe just to confirm that, you know, village banking is some initiative that has been embraced by all the financial sector regulators, the three of us. And I'm sure some of you may have heard the central bank literally come out in support of village banking. And the reason why we took that stance as a country or financial sector regulators is because of the discipline that these concepts of village banking bring to investors. So what you see with village banking is you start to see a savings culture being inculcated. And I think we can testify, village banking has taken a different turn over the past to a village bank. So start to see that the concept and the aspect of putting aside some money for that rainy day is becoming entrenched in our financial management as a people. Then also you are becoming accountable because there's obligations that are expected of you to be met. And if not, there's also repercussions. And we've seen different models of village banking, so graduating from the original in timbers to more sophisticated in the sense that they start to talk of shares, and some of the village banks are actually issuing shares. Now, that is very good in terms of financial education, because from there, once those
Thank you for that, Boy. We have another comment or question from Bix Mwale. He says, I may have missed the first part of the presentation. However, I find that when one decides to buy shares in the companies in the stock market, the process from the decision to buy and to actually buying is barely straightforward for a non-expert investor to consider before moving up. So it's a safe decision in sensitizing the masses and making the process easier. I think this was actually touched on by Leah. She highlighted some of the awareness campaigns that we have, and that is what we're trying to do as a SEC, to just sensitize the masses and make the process easier. And then also, the other way that you can just have information on how to buy stocks is if you contact brokers that we have listed on our website as well as on the LUCE website. They're able to help you through that process and help you come to a decision, because these are licensed investment advisors and professional in their fields that will be able to give proper advice on where to place your money. I hope that answers the question, Mr. Big Swale. Then we have a comment from Mr. Daniel. He says, hi, our worry for us outside Zambia is, can we be assured that investing in Zambia will have no government interference? It is by both the current government and future government.
Okay, that sounds a very, very interesting question, and probably let me answer that. I think this is about laws. Can you lose your shares or can the government repossess your investments in a particular company? I think probably that's what you're saying, because investing on the capital markets is in listed public companies. So we can give an example. Can the government actually repossess your investment in Zafico, for instance? I think this is where the laws about property and the property rights are coming. I think thus far, we've not seen a public company having shareholders forcibly bought out, as it were. So those of you who are outside, I'm sure you get to read news totally different from those of us who've been on the market for the last 20, 25 years since we left our school. So our perception is different, but maybe this is where we need to be communicating more by providing information. And this is just a beginning of many engagements that we can have with colleagues such as yourselves who are in the diaspora, so that you can participate in developing our country. If you get to look at statistics, I think Zambia, I've always chided my colleagues abroad that Zambia is probably one of the countries where politically, I think it's been very, very stable. But in terms of remittances back home, it's very, very low. I think Ghanaians and a few other countries actually beat us. So we need your support. Actually, you are likely to make the market even more liquid. If I were your investment advisor, which I'm not allowed to do, maybe if you're abroad, probably this is the best time to pick up some of the cheap stocks, because your $1 is worth 22 kwacha, and very, very few shares are trading at 22 kwacha. So your $1, if you send $100, you're probably likely to buy a lot more shares on the market. And when the economy does turn around, you stand to benefit by having put very, very little investment in a number of companies. And then when the upside comes, it's sold to you. I think that's why we were showing that 10-year plus kind of trajectory, to see to it that we have to look for longer term kind of investment horizons compared to short-term horizons. An example I have is that there are a number of colleagues who sold their houses for nothing in Luanshya. And if you go to Luanshya now, the economy has picked up a bit and people are actually buying plots. And a few of my friends are saying, I should have not sold the house in Luanshya. So let's have a longer term view in terms of investment. In the shorter term, 3, 4, 5 years in political cycles, there could be dips, but let's look at 10, 15, 20 years and see what happens. Yeah, he says it's based in Ireland. Yeah. So we'll try to make sure that we look after your investments back home here. Thank you.
No, thank you, CEO. Well, there's another question I may have missed. We've tackled this one. There's a question here. He's asking from, this is Mr. Tom Kamwendo. And I saw your hand, Mr. Kamwendo. I think this is what you wanted to ask. Why don't we have an internet-based trading on Luce?
Now, can I check that one as well?
Yes,
I think
yeah.
these are the initiatives. The Luce, I'm aware, they're about to launch a mobile-based app so that we can be able to trade wherever we are. Similar to the way cryptocurrencies are being traded by our youngsters. They're in a bus, they're having lunch, they are busy trading. I think we need to do that. That's why we've been having the schools challenge, so that we can excite the youngsters with knowledge about buying and selling securities. Most of them actually have more knowledge than we do, or than we did, about they are trading currencies, they are trading cryptocurrencies as well, and other crypto assets. So integrating them into the local markets will be an easier thing to do. But jumping on a bus to go into town to buy and sell shares is probably a no for most of our youngsters and even ourselves. I think technology should be embraced to see that markets are more liquid, liquidity coming from an increased number of participants. We'll certainly encourage that. And the sandbox that my colleagues are talking about provides an opportunity for those of you who are technology savvy to come up with ways that we can trade in a more comfortable way, as it were, using available technologies. Sitali?
Okay. Thank you for that, CEO. Thank you, everybody. If you don't have any other questions, okay. Mr. Douglas is asking, what is the idea and premise around green bonds? And then there's another question.
That's from Tumboy, yeah. Let him.
Yes, definitely. Okay, but before you come in, Ms. Mundia, on that one, there's another question saying, what's the possibility of incorporating internet apps independent from the security commissions such as Robinhood, with the growth of technologies such as World Remit? This could create easier investment opportunities. Then from Dumisani, we have a question saying, what economic variables affect the performance of listed companies on the Luce? Ms. Mundia, you could start with the green bond.
Okay, so I'm just putting up a backup now So just in case my network plays up like earlier. So with the green bond, I think the question is, what is the idea and the premise around the green bond? So the idea is sustainability. The idea is serving mankind. And I think we are all sold out to the reality that if we do not change the way we do business, we will not be sustainable as a planet. And there's enough evidence to show us, even right here in Zambia, what climate change effects, the negative climate change effects have hit Zambia as well in terms of rain patterns. And I think even the year when we decided for ourselves as regulator that we needed to be seen to be providing leadership in 2019, if I'm not mistaken, that was the year when we really experienced a lot of power cuts on account that we didn't have enough water and we didn't have enough rainfall. The food security issue was also very alarming. So it's compelling that we need to find better ways of how we do business, and it actually doesn't matter what sector you're in. So whether it's in agriculture, whether it's just in an office setup like the SEC, in terms of just how we conduct even just our printing, our behavior around printing, and whatever sector. So that's basically what has motivated it. That's the premise why we have gone to put a framework that will motivate businesses to commit to the green agenda. So the green bonds is basically an instrument that makes that possible, because it mandates you to apply the funds that you raise from issuing a green bond to very specific green projects. So the rules of the game are that you are supposed to, prior to having issued this green bond, gone through certain processes that confirm that the proceeds or the projects that you are wanting to label as a green project is indeed a green project. So you will have to engage what we call independent verifiers or reviewers, who will assess how green that project is and whether it is indeed green. And there are international standards that are used to determine this assessment. And it's extremely important, because otherwise would have anybody just claim that I am issuing a green bond, when in essence or in practice, you haven't put in place, first and foremost, a mechanism to make sure that the proceeds will go to a real green project. So I think so with our framework, it sets out the disclosures that you're required to make, and it also requires you to state how you will ring fence those monies, so that in the event you're an entity, for example, like ZESCO will have green funds. Let's assume they've come to the market. They'll have green funds, and at the same time, they'll have brown funds or other funds. So you need to convince us that you're ring fencing these green funds, so that they're literally going for the purposes that you have indicated in the project. So from where we see it as the Commission, and where, especially after 2020, you find that there is a realization globally that the next crisis that we need to be avoiding is the crisis to do with climate change. And what has now happened is your major fund managers have now given themselves targets of making sure that they're investing in green projects. So our other rationale for putting in place this framework is we want to position as Zambia. We want to receive the monies that are spoken for green projects, because Zambia is a very green project country when you really examine our natural wealth. There's so many green projects that we have that are investable and really worth it. When you look at the plantation, tree farming business, when you look at tourism, when you look at the water resource management, solar power, all those things, wind power, we have so many investable projects, and therefore there is absolutely no reason why the funds that are spoken for green projects should not come here. And we actually see that impacting our macroeconomics fundamentals very well if we position ourselves and if we signal the seriousness, and by that what I mean is our ability to demonstrate that we are ring fencing these funds and they're being applied in the manner that we have pledged we're going to apply them when we came to request for this fund. And I think we can do it. We've done it before. In the presentation that was made, I think the presenters were able to showcase some of the entities that have benefited from the capital markets. And sometimes you are driving along Kafue and you wonder what a beautiful school this Baobab is. But Baobab simply put together a proposal and were able to convince the public that they were an investable project. So you can do a green housing project. I mean, Nairobi has issued their first green project, green bond was for green housing, for accommodation for students in university. So similarly, I think we have a market that is tested. We have the mechanisms to ring fence. We have used special purpose vehicles in this country before. And even if you are a quasi institution, for example, and we've said this to colleagues at the IDC, nothing stops those institutions like ZESCO, the IDC, from ring fencing and bringing those green viable projects to use this instrument called the green bonds. So we're extremely excited and looking forward to a game changer in this space, to be honest. Thank you, Sitali.
Thank you, Tumboy, for that. We have another comment. What are the economic variables that affect the performance of the listed companies? Benson, could you quickly go through that? I think you have touched it during your presentation.
Thank you, Sitali. It really depends. So there's some macroeconomic variables that are essentially cross-cutting. So they impact the economy in general. And then they then have an impact on the aggregate demand. And aggregate demand then feeds into the demand that these companies that are listed on the stock exchange feed into. So the likes of inflation, for example, the exchange rate, the rate at which GDP is growing, those are sort of variables that are cross-cutting across the economy and affect it at an aggregate level in terms of the aggregate demand. So the entire macroeconomic environment, it's all interrelated. So the entire macroeconomic environment has some bearing on how listed entities perform. Obviously, depending on the entity and what it does, there might be some entity-specific factors, maybe the age demographics, or the level of technology embracement and those type of things, but then those are more specific. But at a broader level, the entire macroeconomic environment or system has, to a large extent, a significant bearing on the performance of companies within that environment that they are operating.
Benson, would you also like to touch on the comment? There's a comment on the fact that share prices remain constant for years. So the comment from Matthews is that if I was considering investing in the stock market for capital gains or dividend, how can I go about it? Because the last time I tried, I was told that most companies don't give dividends and that share prices remain constant for years.
Thanks for that, Sitali. It would be great to know who exactly was spoken to in that particular instance. Yes, our market is not the most liquid, obviously from the statistics, but there's obviously some movement in some share prices. And like I mentioned, if you're speaking to a registered broker, they would be able to advise you based on what you intend to to achieve in terms of your investment objectives on which particular assets to invest in. It's also not true that companies don't issue dividends. I'm sure if you do follow the announcements that are being made, there was an annual general meeting just this morning with African Explosives Limited, where they declared a dividend of 8 kwacha per share. So again, it's not all the companies, based on how they perform and how their boards perceive their financial performance for that year, they will decide to or not to declare dividends. But it wouldn't be true to say that they don't declare dividends, because we see this happening. And it's the same thing with share prices. If you're looking, following closely in terms of how the LASI is performing, you will notice that some companies' share prices are moving here and there. Not to say that the market is not illiquid, but there's definitely some movement. Thank you.
Thank you, Benson, for that. Ms. Mundia, would you like to just maybe add on to what Benson has just highlighted concerning the price movement and the dividend issues?
Okay, thank you, Sitali. I think Ben has adequately sort of responded in terms of there being some accountants that will give you dividends. But I think we have to agree that the market is still very, very small. I mean, 22-23 counters is a very, very small market. And remember that this is the only market where your pension funds are also trying to diversify their portfolios. So what you tend to end up with is you have the pension funds investing in almost every asset that's available currently on the LUSE. And the pension funds are holding investments for the long term, which is also another issue that we can discuss in another forum as to whether that is a good idea, as there's been views that that in itself has also contributed to the illiquid nature of the market. So perhaps maybe it suffices at this juncture to say that this realization of the market being too small, so on the supply side, you have very few counters that you are going for, and hence the illiquidity, and this illiquidity now is discouraging an investor to come to the market, because you want a liquid market for a lot of good reasons. Price discovery, and also when you do need your money for an emergency, you need to be in a market where you can get your money quickly. So these are the challenges that have taken us to the drawing board in terms of what we're trying to do out of the Capital Markets Master Plan. So with the Capital Markets Master Plan, this process started 2 years or so ago, maybe even 3 years, where we started to introspect, to ask ourselves, 20 years plus, I mean, we're about 28 years old as a capital market. What is it that we need to do to make this market to get to the level that we desire to see it? So basically, that's all the Capital Markets Master Plan is asking. And then it's trying to provide solutions at the different levels, starting with the fundamental issues to do with policy. So if we're going to make capital markets work, we really need to look at the cost of doing business. And that cost of doing business, which is benchmarked, as most of you will be aware, benchmarked to your government securities. Your government securities right now are your most lucrative investment in this country, in that sense, of the yield that you get on those securities. So for most of us here, we're already conflicted whether you really want to invest in equities when government securities are given such high interest rates. So those fundamentals need to be addressed, and we need to be asking ourselves as a nation, what role do we see the capital markets playing? If it's a role of them being an avenue for accessing long-term affordable capital, then we need to have the policies rectified, however that is done. So again, that's the master plan issues that are being handled. Then once we have addressed those fundamentals, among other things, what we are aiming to do is to see more participation on the market, so you can literally have the product for people to switch investments, if you like. So you can have a vibrant capital markets that's allowing more people to participate. So I thought I'd just make the point that, you know, the master plan has gone to articulate so many levels and is asking just this basic question: what can we do best? I saw a comment which says that our market is not as sophisticated as the JSE, and that's very true. The JSE has been in existence for over 100 years, and in the 100 years, they have had these engagements where they're thought-provoking, we're exchanging ideas, so that, you know, we are developing ourselves and arising to the occasion. And every player, whether you are a policymaker at the Ministry of Finance, there's a responsibility that's been assigned in the Capital Markets Master Plan. The regulator, have you put in the frameworks? And we're just confirming that it's been a busy 5 years of trying to put in frameworks for these products, the new thinking, the sandbox framework, the green bonds, the private equity frameworks. But then the market needs your marketers, aggressive marketers. If you look at the banking sector, there's not a single day when you don't see an advert from one of the banks on our national TV. We're yet to get there when it comes to the capital market. So the brokers, the loose, they need to arise to the occasion and be at the forefront of selling their products.
Mutumboy, I think we have lost Mutumboy.
Have you lost me? I have a backup now. I learned the hard way earlier.
Okay, I'll actually ask you to wrap up. Can you hear me?
Yeah,
Okay, but then you need to turn off one of your devices because we have feedback from the machine.
Okay, yes, I just did that. Sorry. I'm really just concluding my remarks. We are at a very exciting
We still have feedback
in the sense of this plan.
Ms. Mundia, we still have feedback from you.
Are you saying that you? Okay, so probably I need to just maybe move. Can you still hear me though?
Yes, we can hear you now. Yes.
Okay, awesome. So I was just concluding that we're at a very exciting time where we need to agree the different responsibilities. And the point I was making is that, you know, the market players as well, the stock exchange, the brokers, and you can see that 2020 has been a wake-up call with the LUCE coming up with different ways of thinking, and now you can access their platform online, as they have announced. I think they are in the news saying that that will soon be launched. So it's interesting. It's good to actually engage like this so that we can also hear from the would-be investors and the would-be businesses that are coming to increase the counters that are on the stock exchange.
Thank you for that, Ms. Mundia. Thank you, everybody. Just before we let you go, we can have our CEO just say a word or two. Mr. Chitalu.
Sitari, I thought everything has been said. Looking at the time, 1706, I really want sticking to time, exciting or non-exciting kind of debate. But this has been a very, very interesting debate. Very interesting questions asked. I think those questions that we have not been answered, we've got emails of colleagues listed on the screen there, Ms. Mugala, Muileri, and Simasiku that could be contacted. But we are always very, very available, and it's exciting that we have at least over 30 colleagues from DK who should leave this meeting and be our ambassadors in spreading the good news about capital markets. I think Mutumboy did give a very good example, because we don't get to see capital markets for what they are. But there are a few examples that we could close the meeting with. She already talked about Baobab, I think something closer to town is Arcades. Arcades was also constructed in a similar way. The renovations from a farmer's barn to farmer's house, or what is it called now? Central Park? I think those of you who've been in Lusaka longer, you remember that when we were at DK in the 80s, that was really looking like a side barn on a rail track, and it's been transformed. They were the first to issue a dollar-denominated bond, I think about $2 million at that time in the early 2000s, and proved that capital markets work. I always say that there seems to be a common denominator in some of, excuse me, in some of these projects, because the people who are behind Farmer's House, Arcades, Baobab, and even Zambi, probably from the same school. Let me leave it that way, so that I do not sound and appear to be racist. But it points to the fact that they are probably coming from an environment and homes where they discussed securities, shares, and things like that, and seeing the possibility of strangers coming together to work together, put up a project, and see that our colleague in Ireland can actually invest in a solar project run by a DK group somewhere in the province. So it's something that can be done, and it could be a totally green project, and lots could be registered. What is required is disclosure, or what we usually get to say to term as a good story. So come with a good story, backed up with numbers, backed up with a couple of governance structures. That should be able to help you raise funds on the stock market or through the capital market. So without wasting your time further, seeing that it's 1709, it is possible, colleagues, that you could come up with a specific subject area, and given time, we could come back to DK and speak to a particular subject area from amongst the subjects that has been discussed today. I am on the Dragons group, so we could share and chat through there, maybe come up with another exciting thing, and maybe we may end up having a little bit more people participating. 1,000 DK guys, each contributing $1,000, that's $1 million. That's the way capital markets work. With those remarks, thank you very much for coming through and being a part of a cadre of people that will help us spread the news. Sitali, over to you.
Thank you so much, CEO. As the CEO has highlighted, thank you everybody for joining us. And I would also like to just maybe ask a comment or a vote of thanks from anyone from the DK group to just speak as well. We know we have been speaking the whole time. Maybe if anybody has any comment to make in just under a minute, we could allow for that. We have received from the chat, Daniel saying, thank you very much. This has been informative. And with that, we'll end our session today. Thank you so much for joining us. We have posted our contact details in the chat. You can contact us. And for those that would like the presentation shared, kindly send us an email. We'll be able to respond. We were unable to share it in the chat. I think it's a bulky document. That's why we couldn't really share it. But please feel free to contact us and we will respond to any of your queries and comments. Thank you so much, everybody. We'll see you next time.
Sitali, are people not voting?
We have a poll. Okay, I just thought maybe because of time, let me try and put it up. It's a short one. It's just got 3 questions.
It's already come up, Sitali.
Okay. Okay.
I've done my poll.
Thank you.
Hi, Sitali. This is, sorry. Did you restrict it from sex stuff? I failed to
Sorry, I'm
submit.
sorry, I didn't get you. No, there was no restriction. There was no restriction. Okay, I think we're almost done with the poll. I'll ask Clea to just give us the results to see how.
Okay,
done.
if you are still coming in, so I'll just give it 5 seconds. I can see 2 still.
Okay, yeah, makes sense.
Okay. Thank you, everyone. Are you able to see the results, Italy?
Okay, I can see your poll results. Very interesting.
Yeah, I can see them now too.
Yeah, so it just confirms that, you know, we can still get so many people to participate.
Yeah, and we thank you all for actually
Ben, Leah,
indicating
thank
that.
you. Thanks, Italy.
Thank you.
Thank you.
Thank you. And thank you everyone for your time.
Thank you, everybody. Thank you.
Thank you. Bye.
Yeah, that's right.
Thank you, everybody. Thanks very much.
Thank you, everybody.
And hi, Mundia. I haven't spoken to you in more than 20 years now.
Nice. Let's see some of these things. Sitali, will you send us the different comments? Will you share? There's some follow-up comments like on the Green Building Association. They didn't give us their contact. Douglas is gone.
I took some screenshots. I should be able to share that.
Okay.